I lost $6,000 in a single day of trading because of improper risk management, and I do not want you to make the same mistake. Welcome back to the channel, everybody. My name is Artie, and this is The Moving Average, a show where we talk about everything day trading to help you guys be better and more profitable on a consistent basis. A lot of new people, when they get into day trading, they have completely the wrong perception on how much money they're going to make and how to mitigate their risk. Every single trade that you enter has a potential downside. That is your risk, the money that you're willing to lose on a single trade, and the reward ratio. The risk to reward ratio is very, very important. Do not go 1-to-1. 1-to-1 is the worst. That means for every $10 you're willing to make, you're willing to risk $10. Meaning that you would have to win over 50% of the time to cover that risk to reward ratio. Pushing it just slightly to a 1-to-2 completely mitigates that risk, meaning that two $10 losses in a row would be covered by one $20 win. So let's jump right into the charts and let me show you exactly how I had the worst trading day I've ever had. Okay, we're looking at the German 30. The DAX index. It's basically the German equivalent of the US 30. Now, at the time, I was a RSI advocate, that the RSI is the greatest thing ever. You sell at 70 and you buy at 30. And this one thing, plus my risk management, was completely non-existent. This screwed me over so hard, and this was the hardest lesson that I had to learn. But because of this hard lesson, I am now a substantially better trader, and I'm here to help prevent you from having the same mistake. So let me show you what happened right here. I saw the price start coming up. I do not like to trade the market open because there's so much volatility, very long wicks, and it's too reckless for me. So essentially, I saw this high be formed right here, and I saw a high point on the RSI trading above 70. I was like, cool, it's still early in the morning. I'm not gonna go in on this trade. I waited for the trade to go down for a few hours, and then right here, the price hit the lowest point on the RSI at the 30 level, and so I went in on a long position. Right at the close of this candle right here, the next candle started to print green, and I was like, this is amazing. It's gonna go long. I was extremely happy. I knew that I could make a couple $100 on this trade. As you can see right here, the trade started to go up. I was very happy. I was like, I'm the world's greatest day trader, and I'm gonna be a millionaire in the next week. At this point right here, I was up approximately $113. Then the price started to drop back down, and I was like, that's okay. The next candle is gonna print, it's gonna go green. It started right here, it started going up. I was happy, I was up about $120, and then it started to drop. I was like, it's okay, it'll be fine. The price will come down a little bit, and then it'll shoot back up. I was so wrong that looking at this makes me sick to my stomach. As you can see right here, the trade started to go down further and further and further and further, all the way to here. At this point, I was down a massive amount of money. Then I saw this massively long wick right here, and I was like, cool, this is the bottom. We're literally sitting at 14 on the RSI. There's no way that it can go down from this. So I got in on another position of the same size in a buy. I took this trade up. I was in profit, and I was happy. I was gonna close it once this one got to break even, and I was gonna walk away for the day. Then my nightmare started. The price started to go down. Both trades were negative, and I eventually got margin called right about here. Two trades, almost $6,000 in one day, and I was gutted. This is what you get when you trade without a stop loss. This is what you get when you trade without a specific risk to reward ratio. How much money that you're willing to risk and how much you're willing to gain. You have to have specific parameters, because if you don't, then you're letting your emotional mind make the decisions. And trust me when I say, the drawdown that your mind is capable of versus how much profits you're willing to take is so dramatically different, it would blow your mind. So looking at this in hindsight, I would have never traded it whatsoever, knowing what I know now. But had I had proper risk management, I would have gotten in on this position. I would have had a take profit level of, I don't know, the previous highest high, and a stop loss in a nice comfortable range in accordance to how much money that my soul is willing to lose. This easily would have hit my stop loss, I would have walked away from the trade, and I would have looked for my next entry. But because I didn't have proper risk management and because I had no stop losses, I had no take profits, I just willy-nilly entered the market and figured I could judge when to get out, and I was severely wrong. Had I just let this play out, I would have hit my stop loss and been like, ouch, that hurt, but I know what I did wrong. So I know you've probably already watched 6 or 7 videos on proper risk management, but I wanted to make this video a little bit different and share a personal experience with you guys and let you know how devastating it can be without the proper strategies, steps, and rules set into place for every single trade that you make. After this, I no longer place a trade without creating a stop loss and a take profit before I hit that buy or sell button. I will not enter a trade. And I know a lot of you are saying to yourself right now, but Artie, I'll be fine. Like if I don't have a stop loss, I'll watch the price diligently and, if it goes too far down, I'll just close it. Let me show you one example really quick on why that's a bad idea. This right here is GBP JPY at the beginning of February this year. Everyone saw that we were in a clear and concise downtrend, so they were looking for short positions. All indicators, everything that I was watching showed that it would be continuing on the downside. And then a news event came out, and in 5 minutes, this happened. This one candle right here was 64 pips in 5 minutes. That's the time it takes to go to the bathroom. If you went to the bathroom at this 5-minute candle, your account would have been blown with no stop loss. Not only that, but this price since February 4th has continued up time and time and time again, over and over and over, going all the way up to right here. You would have been so screwed. Had your account even had $1 million in it and it was just a small trade, this would have margin called you. Just to give you some perspective on a larger time frame, here is that date. Since that 164 pip 5-minute candle, the price has gone up 869 pips when everybody was thinking that it was gonna go down. So I can't stress this enough. Make sure you never ever place a trade without having a stop loss and a take profit set in. You can move your stop losses along the way as the price continues in your direction. And if you need help with that, you can watch this video on market structure and helping you move stop losses to different levels of structure. I hope you guys enjoyed this video. I hope you got some value out of it. I hope you learned a lesson on proper risk management in day trading. If you guys did enjoy this video, I'd appreciate a big thumbs up down below. Make sure you're subscribed if you haven't already for more videos like this.